Welcome to Price Action Principles. Remember, in the previous models, I already taught you how the foundation of learning how to trade cryptocurrencies. Then I also introduced you to technical analysis. And in technical analysis, we spoke about things that we are going to discuss, which includes price action principles, support and resistance, market structure, Wyckoff theory, and advanced price action. Now we are starting with price action principles. It's simple. I want you to understand that price is everything. I mean, price is everything. It doesn't matter what you see on Twitter, it doesn't matter what you see on Facebook or anybody's telling you, whatever big name it is, whatever news or propaganda you hear, it doesn't matter. What matters the most is what price is telling you at a given time. Even if your indicator is saying that you have to buy now, you have to understand what is price telling you at this time. Looking at this chart, you can see here that the RSI is saying, oh, it's time to sell because it's above 70. But unfortunately, the price is not respecting it. Price is still going higher, even if it is above 70. Understand that price is everything. It doesn't matter what you hear or what you see outside. Always keep in mind that price is everything. Going deeper, I want us to talk about direction versus path. Direction versus path is very key. In this one, I'm going to be talking about using Solana because I love Solana. I always work with Solana. I know everybody thinks Bitcoin is the future. I also think so, but I am more familiar with Solana. That's why I'm always going to teach you about Solana. Solana is going to go from this level to all-time high. But what is the path? People can't tell the path because that is where you make money. If you can tell the path, that is exactly when you begin to make money in cryptocurrency. What is the path here? It's simple. It's up, down, up, down, up, down. This is the path in which cryptocurrency Solana is going to go through. And if you can get this path, that is how you can make money from cryptocurrency. But if you think that only knowing the direction will take you there, unfortunately, you have failed. That is why I say it is not the direction that is most important. What is most important is the path in which cryptocurrency or in which Bitcoin or Solana is going to take. That is the most important part. We head on to the four market phases. The four market phases. We have four market phases in the market at all times. It's either it's in an accumulation stage, or it's in a markup stage, or a distribution stage, or a markdown stage. What do I mean? Let's go into the chart so I can show you. Like I told you, let's delete this. Delete this shit. What is the path? I explained what path was. Now we are going to talk about the market phases. The market can only move in four phases, which I explained: accumulation, markup, distribution, markdown. Here we see it on a line chart. I'll use the candlestick so you can understand. You see, this is the accumulation phase. This phase from here to here is the accumulation phase. This is the markup phase. Markup phase. Then here we have distribution and we have markdown. Accumulation, markup, distribution, markdown. It's the same thing at all times in the market. It's either it's in an accumulation phase, or it's in a markup phase, or it's in a distribution phase, or a markdown phase. These things might be very difficult to understand now, but as we keep going deeper, you will understand exactly what are the market phases. Because if you don't know the market phases, You continually make mistakes, different types of mistakes, and take different types of trades that would always land you back in the negative value. So we keep moving. What is a trending market? Like I told you, a trending market is simple. Markets that are in a trend. How do you know that this market is in a trend? It's simple. When it begins to form a higher high or a lower high, or a higher low, higher high, higher low. It's just that one is enough for you to understand that this market is already in a trending market. But what is most important that you know is that markets don't move from uptrend to downtrend. Markets move from uptrend to a range to downtrend. Up, neutral, down. Up, neutral, down. Like you can see here, you see up. Let me put it in the line chart so you can see what I'm saying. I'll take off this EMA, take off Michael's band, so you can see what I am saying. So the market moves up, it ranges, then down. Up, let me show you with a line. You see it goes up, it ranges here, it ranges here, then down, it breaks down again, it comes down. Exactly how the market moves at all time. Right now it's going up again. Like I told you, markup, this is it has been accumulating since. Now this is the markup stage, and it's now ranging to come down, or it can go markup, range, and markup again. It doesn't have to go markup, range, and down. It can go markup, range, up again, markup, range, down, markup, range, up again, markup, range, down, or markup, range, down. Distribution, you can go down, range, down again. Let me draw it here. You can go down, range, and down again. Just this simple: down, range, and down again. This is how the market moves at every single point. The market is always either moving this way, down, range, down, range. That's how the market moves. Or it moves up, it moves up, down, up, down, up. Exactly how the market moves. This is the phases in which the market takes. It's either it's taking this phase or it's taking this phase. It's either it's going up and ranging to go up, or it's going up, ranging to come down. It doesn't go up and down. It goes, like I told you, I'll do it again so you see it better. It goes up, ranges, can range like this and range like this to go up again. Do you understand what I'm saying? Or it can go up, range, 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 up, range, 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 down, range, 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 down again. So this is exactly how the market moves at every point in time. We move on to what is mean reversion. Mean reversion is when the market is not trending. Whenever the market is not trending, it is in a mean reversion. This is the part where it takes away all the traders. 90% of the traders make wrong decisions. So the market goes just like this, As we can see it here, it comes down. This is a range. This is when the market is neither trending, it is not trending, there is no trend here. You see it. Let me put a line here and another line here so you can see what I'm trying to say. Whenever the market is not trending, it is in a range, and most of the time the market spends 80% of the time in a range. It's not always trending, it's always in a range. So you need to know that, oh, this market is now in a range and I should not trade it like I am trading a trend market. I have to trade it like I'm in a range market. Short times, short, quick, everything quick. If not, you are going to lose money. And for you to make money in trading, you have to understand these phases. The market moves up, range, and down, or up, range, and up again, or down, range, and down again. Whatever it is, there's a range in between, and that range period is the most important period because it's like 80% of the time. What is the nature of a trend and the nature of a range? Like I told you, the nature of a trend is when the market makes higher highs and higher lows. Let me come here. When the market makes higher highs and higher lows. This is what I mean by higher highs and higher lows. It's simple. No, I'm not trying to add any text. Just trying to write. You see, makes one low, one low, one low, but for every low it's higher than the previous low. This is when we can say that this market is in a trend. But when it's in a range, we see this, 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 this. There is no higher high or higher lows. This is simple. Understand this. If it's in an uptrend, it goes up, down, but for every down it's higher than the previous down. The next down is higher than the previous down. The next high is higher than the previous high. The next high is higher than the previous high. That is when it's in an uptrend. The same way, if it's in a downtrend, it goes down, 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 down. So you see, the next down is higher than the previous down, is lower than the previous down, and the next down is lower than the previous down. The next high is lower than the previous high. Understand, this is a downtrend and this is an uptrend. It's very simple to understand. You might not understand it now, but as we keep going deeper, you would understand what I'm trying to say.